Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Friday, October 28th, 2011 is sponsored by Realtik. Alright, let's get right into it today. Market's a very quiet day, much like a hangover, which is something that occurs after a crazy night out. You could look at yesterday's market action much the same way. It was a wild day, tons going on. Today, the markets are almost silent, as if they're staying in bed, barely open. Volume is dead, and look at the action today. It's just been a slow float up and down throughout the day, hovering right around the flat line or slightly negative. Right now, Dow Jones Industrial Average up 9 points. NASDAQ is down 6.5. S&P is down 1.5 points on the day. So again, very quiet day. We'll see if they give the markets a little juice towards the end of the day to push them up into positive territory. Again, it is most likely going to remain very quiet on a Friday afternoon. All right, so looking at the charts here, yesterday, monstrous rally. The interesting thing is to recognize the daily chart. The daily chart is the most fascinating chart right now to behold because of the massive move up off the 107.50 level on the SPY. That move, again, within a matter of 3+ weeks, has taken us all the way up to the 200 moving average, to the retrace of the neckline of the head and shoulders. If I go out here, I can draw on the neckline very easily for you, and I'll do that right now. Here's your shoulder, left shoulder, here's your head, here's your shoulder, and this is your neckline right here. So you're right up into that area. There's a key gap fill right here at the 128.80 level, which is the exact level we hit yesterday. And ultimately, this area is just a major area of resistance that I'm continuing to watch in terms of whether or not this market can get through this level. Short term, you have to think the market needs a breather. It has to come back in. I think much of this move up has been a short squeeze, kind of catching lots of people off guard because of the excessive nature of this move. The low to the high move, 20% on the S&P 500. I mean, think about that. In about a month's time, 20% return or move up in the markets. You don't see that very often in history, folks, if ever. All right, so bottom line is, again, markets having a flattish day, and the question then going forward into next week, what's going to happen? So today's a quiet day, assuming things are quiet over the weekend. Monday could be a quiet day, as volume is usually light on Mondays. But getting into next week, you have to think the markets need a little bit of a pullback. Shorts have been squeezed out. The deal is now done for Greece, but what about Italy, Portugal, Spain, Ireland? All those need deals and bailouts. And then what about the deal here in the United States, which is starting to come back to the forefront of the discussion, which is on can this super committee in Congress actually cut the debt and do some substantial, debt reduction on this 15 trillion in U.S. debt? I mean, these are all four, big waves that are waiting out there to crash into the market. And you have to be a realist in terms of that and say, hey, listen, it's been a great run. They at least took the first step in Europe, but there's a lot more steps to be taken there and in the United States. So looking at that, understanding that, you have to think that the market at least need a little bit of a pullback off of this level, especially with the multiple resistance areas right up here. If we do continue up, your next major resistance will be right here. And this is, again, at the 131 level on the SPY. Then you have a nice little gap fill here at the 133.40 level, and then ultimately right up into the 52-week high double top, which is right around 135, 136, 137 on the SPY. All right, any sort of pullback. Do I think it's going to go back to the lows down here? No, I don't. Not in the short term anyways. Any sort of pullback would probably be a retrace, Fibonacci retrace, maybe a 0.382, which would take us down to about the 119, 120 level on the SPY. At that point, you're going to come into support of these moving averages, and that's probably where you get a sizable bounce. Maybe even we go higher at that point, depending on the outlook of the market. And again, as we get closer to that period, if you're in the research center, if you're in the intraday stock chat here at InTheMoneyStocks.com, I will be letting you know exactly what's going on. I gave out trades yesterday. So far, so good with those trades as we kind of pinpointed the highs level of this market. We'll find out exactly what happens there. In addition, small caps have been rocking it. What I love about this type of market where you have such a major move, the small caps start to go wacky in terms of major gains. For instance, the hidden gem this week, which I gave out earlier in October, on October 10th, I featured Pacific Ethanol at 29 cents per share as the hidden gem in the research center. That stock hit a high of 47 cents yesterday pre-market. That's a 62% gain in about 2 to 3 weeks. Monstrous gain. Eventually it'll go higher. Right now it's pulling back a little, which is fine, consolidating before the next run. But either way, that's what you get for a hidden gem. 62% return in a matter of 3 weeks. All right, that's just one part of the research center too, folks. You get the nightly videos where I'm going to go over charts. Every night I go over charts in the video. We talk about projections and so forth. Daily market reports. The hot charts and alerts are key because I give out my live trades. When I swing trade anything, it's going right in there. I gave out a trade yesterday. My partner gave out a trade yesterday. I'm looking to possibly get into a new trade today. We're going to find out again towards the end of this day if I want to get in a trade. But that's all for you if you want to take it. It's a free trial. You can take a free trial to the Research Center, free trial to the Intraday Stock Chat. Again, 7-day free trial. Try it out, no obligation. Cancel before the end, you're not charged. Very simple, guys. No hidden things there. All right, again, come join us, find out what the keys are to this market. And again, right now I'm projecting a little bit of a pullback. I've positioned myself accordingly. So far, so good today with a small move down. Dow has now gone negative just a little bit here. It was up 10 points. Now it's down about 7 points. So the markets are coming back in. If we look on the intraday chart, it's still in this overall range, though. Essentially, take a look at this little range from today. You have this trend line right here, and then essentially you could even, make a case right there. You just connect those highs. It's a consolidation pattern. So you connect those highs right there, chopping and getting tighter and tighter. Eventually, it's going to break out one way. The question is, which way does it break out? Does it break down? Does it break up? And ultimately, going into Monday, you have to think that the market, again, needs a little bit of a pullback. Not a big pullback, but a nice, solid pullback. All right, let's take a look at the dollar. The markets are quiet today. That should obviously tell us that the dollar is quiet today. And that's exactly what's the case here. Notice the dollar opened up a little bit, kind of came in. That helped the markets come off their lows, and then the dollar has just flatlined. So if the dollar is quiet, remember the dollar coordinates the moves in the market in the opposite direction. The dollar controls the market. When you're trading the market, you have to understand you're trading essentially a currency. Why? Because any news out of Europe, which is what caused the drop in the dollar yesterday, news out of Europe translates into a move in the euro. Good news out of Europe like yesterday, the euro goes higher. In response, the dollar must go lower. The dollar going lower causes the market to go higher. If we have bad news or the euro starts to fall from Europe, then all of a sudden we see the dollar rallying and the markets go down. It's just an inverse relationship there. And again, as a trader, it's your responsibility to know all this kind of stuff when you're swing trading, day trading, investing, whatever. All right. If we go to the daily chart of the UUP, what I thought was interesting that I pointed out to my members in the Research Center video last night was you have, let me just erase these lines here, just get them out of the way for a second. What I thought was fascinating is you had this consolidation at the lows, and then right here at the gap up, this started the major breakout. So the major breakout on the dollar went all the way up here, and then yesterday, look at this. You did the whole entire move, you retraced right down to that exact gap fill. So in a weird way, this tells us that, okay, you've negated the entire move. Chances are you get a little bit of a bounce here on the dollar. And you are getting a small bounce today. I actually think you get a bigger bounce over the course of the next week or so. And that's something that I'll be watching very closely. But that, at least according to what I'm seeing, the negation, the kind of the symmetry of this move does tell us a bounce in the dollar is coming up, which, of course, if we utilize that out, it does tell us that the markets may pull back just a little bit. All right, any sort of bounce on the dollar probably takes us here first, which is gap fill at around 2143 on the UUP, which is the ETF that tracks the dollar. And then this area right here, see the moving averages, the 50 and the 200, and the sloping down 20. Right in here would be your second resistance on the dollar. Any sort of continued fall on the dollar takes you right down to double bottom 52-week lows at around 2084 on the UUP. Okay? And again, this is the UUP, which is the ETF that tracks the dollar. All right, let's take a look at other things here. What else do we want to take a look at? Let's take a look at some big players. Chevron reported earnings this morning. Chevron kind of hovering right inside of yesterday's highs. Initially, it was down, came back nicely. This is a very extended chart. Obviously, it's doing all right on earnings. At this point, I was possibly looking to short it, but I'm not going to look to short this at this time, even though it is into a beautiful triple top area up here. I mean, look at this area up here. Multiple hits of this upper range. Okay, now we talked about small caps like the hidden gem earlier. I think it's important I give you guys one of the major calls from today. I posted this in the Traders Life 24/7 forum today, which for Research Center members and chat members, they have full access. And essentially what it is, it's a beautiful feed, place where you can have a profile, put up pictures of charts, discuss. It's an amazing forum of the best elite traders out there. Anyone can join, and you start to learn from other traders there. In any case, one stock I posted today to you guys in that, and for those of you on Traders Life, you'll know, I gave you guys BORN as a Chinese play at $3.95. All right? So essentially right here, I started to see it uptick a little bit. Right here is where I gave out the call. You can actually see the little pop as I gave out the call and traders jumping in. Traders jumped in between $3.95 and $4, flatlined for a little while, and then all of a sudden, it takes off. goes to $4.35. So $3.95 to $4.35, 10% gain right there. That is a thing of beauty right there. To intraday, that's intraday 10% gain. All right. In addition, I also like this one, CNIT. Same general chart setup on the daily chart. Dead lows. I love the uptick, the bullish consolidation off of the 20 moving average. This probably pops today to about 114, my guess, just touching that 50 moving average right above it. And again, just looking for these charts, these dead low charts. Money now has been made in the large caps and the mid caps. It's trying to find the next area to milk money out of this market. That happens to be the small caps. Chinese small caps have been beaten down unbelievably. I mean, just go back to that BORN chart right here. I mean, look at this. If I zoom out on this chart, I mean, look at where this thing was. Dead lows. All right, ZSTN was one I gave actually to Research Center members and Intraday Stock Chat members. I gave this at 156. This was about 3-4 weeks ago, 156. Today it hit a high of 219. So the money is there to be made. It's just a matter of, do you know how to read the charts? If not, then of course you join inthemoneystocks.com just by taking that free trial. So again, folks, I'll leave you on that note. The profitable week that it was, setting ourselves up for another profitable week next week. I'm looking forward to it. Come join us here at In the Money Stocks. Just take that free trial. It's a simple free trial. Go to inthemoneystocks.com. You'll see the free trial buttons everywhere. Sign up right now. Take care, guys.